You're probably watching this video because of the title. Why will only trading one pair and one strategy make you fail? Now, this is not to target successful traders who do this, nor am I saying that this doesn't work. But for the vast majority of people out there, this will be their downfall. So let's find out why. Hi everyone, and welcome back to the channel. So why am I making this bold statement? Well, one thing that I have learned throughout time of my trading career is psychology is key to trading, and markets tend to change from time to time. Now, if you only have one strategy and only trade one pair, it's only a matter of time before you hit a losing period, as everyone does at some point in their career. So the question is, how long are you willing to go through that drawdown? Let's jump on Quant Analyzer and go through some statistical analysis on two pairs I trade and two different strategies. Okay, so we've went on Quant Analyzer, and what I've pulled up is a report from pound yen on our Sequenti system. And the reason I've done this is I want to go through some statistics with you guys and show you why just trading one pair can be a bit of a downfall for a lot of beginner traders and some more experienced ones if they've never experienced a proper drawdown before. So on Quant Analyzer here we can see, yeah, it's a good return, quite a low drawdown. But if we look at the stagnation days here, 804 days. Now what that means is from where it hit its peak return, it's went down, and it took 804 days to get back to that new all-time high. Now, if we look at the equity chart here, we can see that, yeah, at the beginning, for the first year, it was kind of sideways, and then the second year, it was going up nicely, and then we hit this huge drawdown period. And this is exactly where our stagnation period happened. If we can just get it up. Yep. So that's where our stagnation period was, that red box, and that's the 804 days that I was talking about. Now, my question is, if you were just trading one strategy and one pair, could you keep trading for 804 days without making a profit? Or do you think that's going to hinder your psychology and really muck things up for you, because you'll start thinking things aren't working? It's not necessarily a case that things are not working anymore. It could just be a case of the market environment's changed a bit and the strategy isn't working in that market environment. This is why here at Satira it's so key for us to trade different strategies as well as different pairs, because we can then, through these periods, we can still make a return or significantly decrease that stagnation period, which I'm a way to show you here. So I've made a portfolio where I've added gold and pound yen together from our Sequenti system, and we can see that when we look at the stagnation period now, we've actually reduced it by 75%, so we're now only at a 202 stagnation period. But when we go to the equity chart, that actually didn't actually apply in the area that we're looking at. If you remember, we're looking from like January 2017 to about 2019, and we can see when you combined two pairs together, the same strategy, two pairs together, we have completely taken away that stagnation period. Our new stagnation period actually applied at a new area. And this is why, just looking at this, just adding another pair with the exact same strategy can completely transform the psychology and the drawdowns on a trader. Because I can tell you from experience, going through losing periods for months on months, maybe even a year, it's not healthy, it's not fun. It's gonna happen if you're trading one pair or just one strategy. So please accept that if you are, because a lot of the people that trade one strategy or one pair, they've only back tested it for say a couple of years, because not typically that'll be on the lower time frame sort of basis. Now, you can see here in this portfolio, like most of the years it'll do great, but there will be 1 or 2 years that it will not do great. And that's over a good period. That's from 15 to right up to right now. It's it'll have bad periods. Are you prepared for those bad periods? Now, I've also made another portfolio, and this is trading two different strategies, but on the same pair. So again, this is pound yen with two different strategies, and we can see that trading the same pair does expose us a little bit to just one pair as on its own, but we can get diversification from adding another strategy. So looking at statistics, we can see we've almost half the stagnation period at 436 days. When we go to the equity chart, we can see again, our stagnation period has actually changed to the beginning of the portfolio. And we've really took away that stagnation period from January 17 to January 19. So this is just my quick introduction into showing that adding pairs or adding a strategy can seriously boost your returns, but not also that, also your losing periods and stagnation periods, because they're equally just as important. You could have a great track record, great trading strategy, but if you can't handle going through these drawdowns, you need to change something about it. Now, if you don't have extra strategies or you don't have a portfolio of different pairs that can trade a strategy, then check out our website. We have our own algorithm called Squenty, and it will trade for you, and it trades 6 different pairs and really does give a great return to drawdown periods. Now, that's all for me today. So really hope that you enjoyed this episode. I think going through this sort of statistics is really helpful to anyone looking at just one pair and one strategy. Because again, I'm just going to reiterate, if you only have one trade and strategy in one pair that you trade, wait till you have that drawdown period and you'll see exactly what I mean. But until next week, hope you have a great day, and we'll see you in the next video.